Hello everyone, this is today's video analysis for May 22nd, 2019. Today we're looking at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. What we're looking to do is play on the current momentum of the market. And as you can see along the black trend line, the momentum has been bullish for about a week and a half as the market has risen from right down here into the 109 level all the way up here into the mid 110s. You can see it rising over the past couple days, even pushing through the last resistance, the ping zone, 110.20, 110.35. Past couple of days touching 110.60.70, the orange zone, as resistance. Now we're kind of rattling around between the orange and the pink zone. The pink zone will be our intraday support. Let's just go ahead and put an arrow there. That is our support for the day today. We've seen support here before. We'll look at that later on in the trade room. The risk right now is that the market turns around, starts going back down, and gets back under the pink zone. Similar to what we could have looked at here at the green zone. As it got above the green zone, we would not have wanted to see it get back under the green zone. And that's typically the way the market's going to move. It finds a pattern and moves within that pattern for a period of time. Something else interesting about the pink zone, 110.21.10.35, the pink zone, is Fibonacci in the midst of that pink zone, the 0.382 of the previous downtrend. So highest high on the chart down to the lowest low measured with Fibonacci puts the 0.382 or 38% retracement level right at 110.31, which is right here just underneath the current market, the dash blue line inside the pink shade area. So we're sitting above the 382. We're sitting above what has been historically support and resistance, but currently acting as our support. So that becomes an opportunity for us to trade the pattern of the trend with the known risk that we just don't want it to get underneath that pink shaded area. So stop loss would be underneath, just like at the bottom, again, at the green zone, your stop loss would have been underneath the green zone. If it can break through what our current resistance, again, the resistance is the orange zone, 110.60, 110.70, we'll look for a new high. Getting above the orange zone, we would challenge back towards the yellow shaded area up here, 110.90, 111.0. So that's the pattern that we're following here with this trend. Let's take it on down to the 4-hour time frame, see how all that measures up here on the 4-hour time frame. And I think it really kind of solidifies what we're talking about here, because once it gets above a resistance, you don't want it to get back below. We've seen that before. Even down here at the yellow zone, you can see that happening. It found support, came back up, dipped back down. So again, finding support at the yellow shaded area here, and once it was finding support there, you didn't want it to get underneath. Your stop loss could have been underneath that yellow zone. You can see how these red lines represent the fact that once it's above, and we can talk about what it means to get above later on in the trade room today, but once it's above it, we don't expect it to get back below it. Take a look at these little dips, the pattern within the trend. You see the dip here, you see the dip here, you see the dip here, and of course, what are we doing right now? We're making that dip into the pink zone. So that's the pattern within the trend. And if you're going to trade the trend, the momentum, the sentiment, and the pattern within the trend, it makes the most sense today not to be selling on top of that pink zone, the 382 of the previous trend range, but looking for opportunities to go long on these dips to 110.35 for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.